What's going on, traders? Welcome back to another video. My name is Prince, full-time foreign exchange trader and the head trader at princeforextrading.com. And what I've got for you today is a trade breakdown, a couple of trade breakdowns. This is a trading technique that I've used over the years to create some edge, some significant edge over the market. And my hope for you at the end of this video is that you can actually take this technique and implement it in your own trading strategy as well. And hopefully you can make some kind of return from it. So if that sounds like something that you're interested in, be sure to like, subscribe, and of course share this with someone that you think is going to get some value from it. And I'm going to see you in the breakdown after the intro rolls. All right, so we're going to be looking at a couple of currency pairs today. The first one we're going to be looking at is the Euro CAD. Now, because I'm a swing trader, I like to look at multiple time frames. Don't worry, we're going to get to the trade in a bit, but I always like to start from the daily time frame. Now, the first thing I want to be looking at is what exactly the market is doing. What is that? Where did it come from? Take that off. Cool. So the first thing I want to be looking at is what exactly is the market doing, where is it, and where is it likely to go? Oh, well, let's just start off with what exactly is the market doing. So I'm looking at this here, and I'm sure a lot of you are looking, thinking, well, this is just a mess. I'm not even going to lie to you. This is quite a bit of a mess. So let's just go frame by frame and see what the market has done. So let's just start from here. We had a kind of like a sideways movement. Then we had a break and close below. But mind you, this is a daily time frame, by the way. So each single bar is a whole day. So you can see this has been happening for like what, since March, April. So since March, April, this currency pair has been moving sideways and sideways and sideways and then even more sideways. But then something happened eventually. We're gonna have a breakout. So if you're looking, if the market moves in three ways, it can be going up, it can be going down, or it can be going sideways. So if it's going sideways, which it does a lot, eventually there's gonna be a breakout. Okay. So what is the most recent move? Let me just take off this. I mean, you get the point of this sideways movement. Now, I just draw this out because it makes it a lot more visual so you can understand what I'm saying. So you can see a lot of sideways movement, nothing much really happening. Took a few trades, took a few losses. It happens, that's okay. So let me just take that off. So what is the most recent move here now? Sideways movement for months and months, and eventually, let me just drop a line. You can see we have a final break. So like I said earlier, market is either trending up, trending down, or sideways movement. So there's been a sideways movement for months and months, and then eventually we had a breakout. So yay! So we had a breakout, which is signified by this bar here. This, you can see the huge red candle on top of it. In case you missed it. So we have a huge red candle signifying a breakout right there. Now, why is that a breakout? Well, a breakout is, we had a breakout because we had a break and close above this previous structure right here. Now, guys, this doesn't look like much because we're on a daily time frame, but mind you, this is a whole day. This bar here has been a whole day's worth of trading. So if we have a break and close above this single bar, that is significant on the daily time frame. Okay, so we've had a test. You can see we had an initial test with this bar here. We got rejected. And we had a retest with this bar here, and we got rejected again, and then eventually we had this huge break and so this is significant. So we've had a huge break and close above. Well, what does that tell us? Well, that tells us we're gonna have a continuation, most likely towards that direction. But let me show you something. If you look left, because you always have to look left because structure leaves clues. Okay, so if you look left and move this a little bit higher, what do you see here? You see another structure level. Now, I'm not saying this structure level is more significant than this structure level. All I'm saying is that there is a major structure level looking left even further. So we've already confirmed our bias that the market is trending upwards, right? We're looking for buy options, right? But what if I told you that we can actually find a sell option in here? Now, you see, the way the market moves is that it moves in waves, okay? So we understand this, hopefully. So if you understand the way the market moves is that market moves up, and then it goes down, and then it moves again, and then eventually, for some reason, it stops, and then it comes back down. Well, what we as traders is trying to figure out is exactly is at what point within that wave is it gonna go up or down. So you don't want to enter too early when it's going up, or because they're gonna be stopped out on the downside. You don't want to enter too late when it's going down because you're gonna be stopped out on the upside. So you want to figure out the optimal moment where the market decides to reverse and go up. And you also, if you're selling in this upwards trend, you want to figure out what is the optimum time for you for the market to reverse and come back down. So in this particular example, we figured out the market is doing this, so we're going up, right? What we're trying to figure out now is at what point in this uptrend is the market going to exhaust itself and come back down? What are the factors that is going to make this market stop moving up? Because it will stop moving up eventually, because we know the market moves in trends some other time. Sometimes it moves sideways, but at this particular moment, it's broken out, so we are expecting it to form this type of wave, okay? So the market has broken out. Eventually, it's going to reach this moment of exhaustion. So think about it as, what's a good analogy right now? So think about it as a I don't have a good analogy, but eventually, if you like, okay, I have a good one. If you launch a if you launch a rocket into the sky, eventually it's going to run out of juice. Juice, that's what rockets use, right? Somebody get Elon on the phone. So runs out of juice, is going to reverse back and come back to Earth. Okay. Hopefully you're getting this. But in this example, anyways, I'm just gonna stop with my horrible analogies. So in this example here, and let's just come back down. Yeah, here we go. So in this example here, we've broken out of this major structure level. So the rocket has been launched. We've overcome massive resistance from a lot of selling pressure, which we have tried to fight the first time and failed, tried to fight the second time and failed, and we've eventually broken out of that resistance level. So now the market has to take a break because it is exhausted itself fighting all these sellers at this point to break out. So now we have to have some exhaustion. The market has to rest. Why? But at what point does it rest? This is where the market structure comes in. Because if it's fought some sellers here, you better believe it's going to fight some more here, most likely. This is how I like to think about the market. It's like a battle between the bears and the bulls. So who's going to win the tug of war, essentially? And at what point do you get in to be on the winning side? So the market has, the bullish market has won this battle, but then it runs straight into this battle here. So this is all we are doing on the daily, kind of figuring out what battle we are trying to fight here and what side we want to, jump on. Now, how do we get in? So we figured out that the market is going to reverse here. This is the most, this is likely the point where the market is going to meet some exhaustion. Okay, cool. That's fine. Well, how do we get in? And at what point do we get in? Because as you can see, just because I drew in a line doesn't mean that the market stopped at that particular line. You can see the market kind of pushed through, and this week, again, this is the daily chart, so this is probably like tens or hundreds of pips, depending on the currency pair. So this is the point where we drop down to the hourly chart. So again, on the daily, we're figuring out what the market is doing and what it's likely to do next. And then on the hourly chart, we're figuring out how to get in. So we form our bias on the daily, and then we come down to the 1 hour chart, and then we figure out how the hell do we get in. Because again, you don't want to get in too early or too late. Now, this is how I traded this. So again, this is the yellow line I drew in. This is the initial structure level that we broke out of. And this is the major structure level that we drew on the hourly chart, this right here. Cool? Cool. So this is what I did. Essentially, I was looking for reasons of exhaustion. So what I use to figure out what the market is doing exactly in terms of like exhaustion is the relative strength index, and also a double top. Now, guys, let me make something clear right here. Your reason for entry has to be it has to be consistent, but it does not have to be the same as what I say in this video. Your reason for entry here has to be something that you have back tested, that has proven to work and that you apply consistently within the market. Now, let me show you how I did this. But your reason for entry doesn't have to be this. I can't stress that enough. So what I was looking for here is a double top, because this is a counter trend trade. Essentially, I am going against the market, because if you recall, if you go back a few minutes earlier, we figured out that the market is bullish at this point. Now I'm selling into a bullish market, so I have to be sure that this is where the market is going to reverse. So one, we already have the structure level looking left. That's a huge signal, okay? And second signal is this nice double top right here. Now, a double top, technically speaking, is just a retest of a structure level where market rejects that price. So market comes up. All a double top is a market comes up and tests. You can see, if you look down, you can see the market is massively overbought, sorry. It's 93.78, massively overbought. And then it gets rejected, right? Then it comes back up for another push to break that level. And you can see on the second retest, market is not as overbought as it was on the initial retest. That is my signal right there. It is that simple. On this particular trade, that is my signal. Now, let me show you the beautiful thing. Now, of course, you're not always going to catch this. It's not always going to be. Mind you, this is happening over hours. Each bar here is an hour. And you can see when this trade started to form, it was 4 p.m. Okay, GMT, my time. And I didn't sit on my desk for the next 12 hours for this to happen. Actually, when the trade actually matured, which is this candle here, it was 7 a.m. And I'm actually gonna put the screenshot of when I actually decided to take not when I decided to take the trade, but when I finally got around to taking the trade. When I did see the trade, it was actually like on the third or fourth, I don't know what, it was somewhere around here. But I'm gonna put a screenshot in here right now. Now this is the beauty of swing trading. You don't actually have to be sat at your desk all day to wait for this to happen. I was essentially sleeping when all of this was happening. It was 12 midnight, 1, 2, 3, 4, 5, 6, 7. But of course I didn't take this trade at 7 a.m. because I was probably watching cat videos or something of the sort. But I didn't catch this trade at the particular time I was meant to. But that is the beauty of swing trading. You see, I had another 6. So this is the price I was meant to take the trade. But I still had like another 1, 2, 3, 4, 5, 6 hours for me. This is besides the point. You should be trying to catch the trade when it matures, guys. This is a bad habit you should not be taking on. But I still had like 6 hours of, free time. In case if you were in a coma, you got 6 hours to get out of it. If you were going for a run, you have 6 hours. If you were hungover, you have 6 hours to get your shit together, essentially. So I actually had 6 hours of grace to be able to get into this trade. Now, this is, by the way, this is just one of the reasons why I love swing trading. So, but anyways, this is the price where I got in, even though I caught it like 3, 4, or 5 hours later. And if you're not looking at your charts for 6 hours, I mean, are you even a trader? So I caught this trade around here after like 3, 4 hours of grace, and you can see the market just simply rolled over. Now I'm gonna get into the reason why I put my stops and targets where they are now, but again, let me just give you another reason for entry here. For instance, that this is my reason for entry. For someone else, they could have been looking at saying, okay, they figured out looking left, there's a structure level. They could say to themselves, okay, well, market is overbought here, or there's a double top here. You could also be looking at a doji candle. You can see right here, there's a nice doji candle, which signifies like indifference. The market doesn't really know what it wants to do. That is the general consensus of what doji candles signify essentially in the market. So you can see a doji candle right there. You can see right next to it, there is a lower low, lower close candle as well. You can see another indecision candle. You can see another bearish candle, another lower low, lower close candle. I mean, this sequence right here would tell 99.9% of traders that the market is about to do something. That is essentially what it did here. And of course, you have the huge red candle that tells you, okay, well, yeah, we are going down. But at this point, it's already too late because, I mean, you're not gonna. This is essentially the definition of catching a trade too late and FOMO. So if you're catching this trade when it's already happened, then it's already too late. But you could also be looking at that and saying, okay, well, yeah, look at these candle sequences right here. Maybe that's going to be my reason for entry. Or you can also say, okay, well, listen, market is bullish. We've come up to that level of structure looking left. And we also have like, just from the eyeball test, I think we have like an ABCD pattern right here. Boom. Now, of course, it doesn't come all the way up to the line, but this is why I like to use zones when it comes to my structure levels. If you read a lot of textbooks, you're gonna see a lot of people like just putting these little tiny lines and then market coming up, touching it, and then reversing. That's a textbook example of trading. That never happens. Okay, you're never gonna get a trade that just touches your entry and reverses and gives you an easy win. You can see even on this example, you still have the candles poking through. They're kind of seeing if it's gonna stop me out. Now, of course, if you have like a bad stop, like some people put their stops all the way here, you're gonna get stopped out, which is why I push my stops far enough away to be safe from getting spiked out, but not too far that I'm now risking more than I'm actually gonna make. If you'll have a look at this trade, is about, what is it, like a 1.5 to 1? Exactly. Boom. Oof. On the money. So a 1.5 to 1 trade. So I'm risking 1 to make 1.5. And guys, 95% of my trades is always gonna be more than a 1.5 to 1. Usually I take like a 2 to 1 or 2.5, even like a 5 and a 5 to 1. You should try to squeeze as much as you can, of course, without being greedy, within reason, within your trading plan, of course. But of course, you can also see like you have an ABCD pattern, you have a double top, you have RSI divergence, you have structure looking left. Now, you can put all this together and ask yourself, well, is this what I'm looking for? Is this enough for me to get into this trade? And if it is, well, you just have to get into the trade. So do not be scared to actually jump in front of a moving train when it comes to trading. Sometimes the train stops. Sometimes the train just stops in its tracks and goes the other way, which is essentially what happened here. Now this is a bit of a trickier way to trade because you're kind of going against the market trend. So you're kind of trading against the market. It's a bit weird. It feels uncomfortable. But as a counter trend trader, when this type of setup happens, more often than not, it's like 75% of the time it actually, well, on this, for my strategy anyway, I don't want to speak for anyone, but 75% of the time to 80% of the time when this happens, it is usually a winning trade. Now let me show you another example on the, I think that was on the, yep. Okay, so let's look at the US oil. So again, from the daily, same thing happened. Okay, don't mind all the junk on here. It's I just like to look at my losing trades a lot and my winning trades, guys. I win too. Okay, so if you have a look at, we're looking at this trade here, this particular one, this one. Don't worry about these ones. Okay, we're looking at this one here. So you can see again from the daily. Okay, we're looking left, we have this structure level here. So if we look left, so we can see if we have any more structure levels. Yeah, we have a little bit here and a little bit here, maybe a little bit here. You can make a case, I guess, for this one here. Again, these are zones, okay? Don't just pay attention to the lines. I'll just put these lines here so I can remember what I'm going to talk about in this video. But you can see the immediate structure level looking left is on the money. It just touches that line and reverses. And that's exactly what happened here. So pay attention to this first line. Let me just take this off. I don't even know why this is here. So this is the line we're looking at. This is the structure level we're looking at. Now let's go down to the 1 hour again. Yeah, I really need to clean up my charts. Cool. So this is the line. Again, same thing happened. Oh yeah, and now I'm going to show you the reason for my target. I didn't show you in the previous example. So this is my target here. But again, let's just recap on what happened for the reversal. Now I see market came up. We had the initial test. Double top. Again, you can see clearly, looking left, you can see the market has just put in a nice break and close above structure. This is the initial structure. This green zone is the initial structure that was broken. This is the next structure level that was broken. So the market is moving up. You can see it's moving from the bottom left to the top right. That is like a clear signal that the market is going that direction. Cool. So market is moving up and moving up and moving up, moving very nicely, and then eventually we get to this point, and then what happens? We hit a snag. Market gets overbought. Looking down, you can see 84. So market is usually overbought between 80 and 90, and oversold between 10 and 20. Now, for my purposes, I put it on 80 and 20. Just I want a really oversold and overbought signal on my trade. I don't want to take every single thing. Some people put it at 60-40. That's a huge range. You're gonna get a lot of bad signals essentially from the RSI. So I put it really oversold, like over 80 is oversold, overbought, below 20 for oversold. Cool. So market comes up, tests, oversold, 84.4, cool, and then comes down and retests again, and then you can see that divergence, not as oversold as the initial test. So this is my signal right here. Now for targets, I'm asking myself, well, for targets, I'm asking myself, well, where is the market most likely to run? Because we're selling in this particular example. Where is the market most likely to run into buyers? Now, if you look left, what you're looking for is the next is the previous level of structure. So if you look at the previous example, we had the market going up and down, up and down. The most likely place for this for the market to reverse would be at the previous level of structure right here. And you can see the previous level of structure. If you like superimpose this to this is a terrible drawing, but if you just kind of like, squint a little, it looks quite similar. So this is the area where the market is most likely to reverse. And you can see it doesn't just reverse on the line. It comes down a little bit. I mean, market was oversold as well. You can see like it was below 20 right there. And then it reverses. So we're putting out our targets. Oh, it's getting messy again. Let me just take this off. So we are putting our target right at the area where market is likely to reverse, which is the previous level of structure. And you can actually, if you find a reason to buy in here, you can say to yourself, okay, well, cool, I'm taking a sell right here, and I'm looking to take my target off right here. But I do know that we are in a bullish trend. So when I take my targets off right here, I'll be looking for a reason to enter bullish right there as well. You can absolutely do that. And you can see if you had done that. Now, I didn't get the reason for entry for my trading strategy here. But you can absolutely say to yourself, well, if I have like a higher close candle, or if I have like a doji candle at that area. Now, this would be the structural area we're looking at here, of course. You can say to yourself, if we get like a double bottom, or we get like a doji candle, or we get like a higher close candle, or we get like a pin bar candle, or whatever the reason for your entry is, because you already know the basics, you already know the fundamentals, you already know the market is reversing at that area, it's coming back to the previous structure level, and we are in a bullish market, and it's most likely going to reverse right there. Now the question is, how do you get involved? You can actually also have, for those of you that trade like advanced patterns, I think I see like no, that's not it. I was gonna say we probably have like a bad pattern there, but we have a break and close at the C leg right there. So that, yeah, so this is just like how I trade counter trend trades. It's very simple. You can see once it clicks, or once the signal is triggered, it very easily like runs to target, because the market does need to rest most of the time. A lot of people are looking to buy into the market, but they don't really care where the market is going to run into that exhaustion and come back down. So those are a couple of examples. If you've got any questions, of course, just put it in the comments.
All right, guys, that was the video. Hopefully you got some value from that. And if you did, please do, again, like and subscribe. And if you got any questions, put it in the comment below. And if you want to connect on Instagram or Facebook, I'm going to have the links below as well. And if you want to like a one-to-one consultation or a one-to-one call with me, if you got any questions that you want to like speak to me about, I'm going to put like a link to my calendar below, and you can actually book a one-on-one call with me and speak to me over the phone or on Skype or whatever you prefer. So go ahead and do that, and I will see you guys in the next video.